All right, everybody, good morning. Can you hear me and see my screen? All right. Good morning. Welcome to the live stream. Yesterday, the Bulls found a low and pushed up off of that. If you're in my room, you know that we've talked about the market looking for a bottom in this area. There's a lot of reasons for the market to bounce. Whether that bounce is dead cat or back to the all-time highs is still to be determined. But with the depth of the current move, the Bears have asserted themselves and made it um, a little more murky. So it was the structure still looks like it needs another high to finish out the overall move, but it's certainly possible that the top is in. So off of the low we made yesterday, it's just going to be critical for the Bulls to hold this level, to hold 55.65 and push higher out of here. And then ultimately, they're going to have to retake this 58.50 area that we talked about last week. In all of my videos, I said that we should be coming back into this 58.50 area and pushing down, and then the nature of this pullback would tell us a better story. As of right now, given the move up and down, I would count this as 4 and 5. However, it is possible that this is A and all of B. It would be a shallow B wave, so I'm not real confident that that's the case. It's possible. And then this would be 1 and 2, and then you'd look at the bigger failure to the downside. So right now we're kind of in wait and see mode in the bigger picture, or in the medium term here, of will the Bulls be able to fight back over this wave 4 high? And if they can, then we can start to talk about what kind of bounce we're getting up, whether it's going to be a bigger bounce into 5,900 to 6,000, an even bigger bounce than that back to all-time highs, or if we're going to see a bigger turn down after a dead cat bounce where we get ABC 1, 2, and a setup for the downside. Just finished March, and March was an incredible month again. That's basically how it goes. With the indicator, that's what we're going to be trading today. So hopefully we get good setups and trades. But if we don't, that's still part of trading. I have Matt, one of my users, one of my paid subscribers. He keeps track of all of our trades for me. I keep track myself, but he's more on it. So here's Matt's post from yesterday on March. So January we were plus 592 per contract, times 25 contracts, so we were up about 15,000 in January. February we were up 193 times 25 contracts, which is about 5,000. He wants me to change to 30 trading contracts, so this is not fully accurate. This is Matt's number. I usually trade 25 contracts. But we were up 385, which he has for 11,000. It's actually be about 10,000, 9,900 or so if you multiply it by 25. But still on pace for over 100,000 day trading this year on a $100,000 account. So that is 125%. Should that play out for the whole year? Now, there are going to be good and bad months, good and bad weeks, good and bad days. So you have to take each month, each day, each week as it comes. And you have to use good trading discipline, philosophy, and understanding. I preach this a lot, and I still have, unfortunately, it's not a good thing. I still have traders who um, trade their entire account on one trade, that don't use stops or try to double down on trades or chase. And all of that's going to do is break your account. And that's what I'm here to avoid. I'm here to try to help you not do that. So if you follow the rules that we use on the indicator and trade with discipline and understand that you're going to have winning and losing days, then it really becomes a game of just clicking buttons robotically, and that's what you really want. You want this to be as robotic as possible. The last, 3 out of 5 days or so have been trend type days. So a trend day, obviously, is a day that moves in one direction. However, to identify a trend day, we have a pretty good way to do that. So the first thing you want to see is the market get above or below, whichever the way the trend's going. So in this case, yesterday was a trend day up. So you want to see them get above VWAP in the 21 EMA, on the 5-minute. And then you want to see them back test it and hold. And then you want to see all subsequent back tests hold the 21. Also, you want to see them get above the pre-market high. So the pre-market high was right in here. They came back, tested the 21 again, broke out over the pre-market high, tested the 21 again, and continued on. So on trend days, it's not real lucrative to trade, regardless of how you trade. It's not great to chase trends. We got in down here. This buy was a winner. This sell was not. This sell was not. That one was a winner, but we didn't take it. That one was a winner. But after the trend was established, I stopped trying to sell. Because you're selling into a trend day, and you might get little wins, like this one was a win. And I believe this one was a win as well. But they're little wins, and the risk reward against a trend is not a great idea. We've had a few of those lately because the market's got high volatility. So we had a trend day down here, and people wonder why you don't get a sell up here. Well, you gapped down 50 points to start the day, and you did get a sell right here. And that sell cycle never got completed or reversed. So it's going to stay in a sell cycle until you get a buy cycle that actually can move it back into a place where a sell cycle makes sense. In other words, you got some buys in here, but they didn't go anywhere, right? This one was the best one in the pre-market here, and it just got back to price. So it never gave you a buy cycle that told you that we got a good enough bounce that a sell's getting back into the sell side's a good idea. And that happens. You're not going to get every trade. You're not going to get every move. So you did have a sell here. It was just before the market opened. And the buys never, you can see all the long stops, meaning the longs never got established. They got stopped. So when you have a cycle, let me see if I can find one where we cycle here. Yeah, when you have a cycle, so last, whatever the 27th was, Wednesday, I believe, you get a buy down here, right? So you got a sell, the sell completed, then you get a buy off of support, that buy rocketed straight up, then you get a sell back down, and then, the rest of the day is chop, because once you get to later in the day, that tends to be how it goes. So this, I believe, was last Wednesday, very good trading day. Or maybe that was last Thursday. Another trend day. Trend days, you're going to get a lot of, it's looking for reversals, so you're going to get a lot of buy signals on down trend days. You're going to get a lot of sell signals on up trend days. But if you look, what did they do? They went down below the 21 in VWAP, back tested it, held, back tested it, broke the pre-market low, back tested it, held, back tested it, held. So as long as they're back testing the 21 and holding, and they're above or below the pre-market high or low, then it's a trend day, and trend days are not going to be great trading days. And they're going to have some of those. 8 out of 10 days are more like this, where you have two-way price action, where you have a low where you get a buy signal, takes you all the way up to the high where you get a sell signal, takes you back down to the low where you get a buy signal, and two-way trading action is what you see. Now, it's not always that perfect as far as trading goes, but that's a good day. That was last Tuesday, I believe. So trend days, you're just not going to have good trading days. There are times when we get in at the bottom of the trend and rocket it up like we did over here on Wednesday. We got in right at the bottom. They trended up for most of the first part of the day. We got to where they told us to sell. We did, and so on. So are there times we're going to catch the trend? Absolutely. Are there times we're going to miss the trend? Absolutely. And that's okay. That's part of trading. But if the conditions aren't right to enter a trade, the indicator isn't going to produce a signal. So the only thing you can do is get into good setups. If you get in a good setup and that trade loses, then that's still a good trade. Sorry. If you get into a good setup and the trade loses, that's still a good trade. You took the right setup with the right risk reward. You're never going to win every trade, but getting into good setups will give you the highest chance to win trades, as well as make money and continue to beat the market on a regular basis like we do. So another thing real quick before we get, we still got about 15 minutes. Risk reward. You have to understand risk reward. So some people back tested and said, I found that the last 50 trades were 25 wins, 25 losses. Yeah, probably. On good months will be maybe 60-40 win-loss. But you have to understand risk reward, right? So if I'm risking if I'm risking 1 with a reward of 3, in other words, my risk reward is 3-1, and my trade plays out, I only have to hit that trade 1 out of 4 times to break even. Because one time I hit and I get 3 wins, and the other 3 times I lose and I get 3 losses. So the one time I hit, I win 3, and each time I lose 1. So the 3 losses total up to 3. So I only hit 25% of the trades, but I broke even overall. So the win-loss ratio of trading is irrelevant. It's more about risk-reward and understanding what your risk-reward is on trades so that you can make money on the high probability setup of your trade playing out. There are people who only hit 3 out of 10 trades, but because of how they set those trades up, they're still profitable traders. There are people that hit 7 out of 10 trades and are not profitable traders because they take 20-cent wins or 5-cent wins, and their losses are big because they don't know how to use stops. So the key is limiting your losses, maximizing your gains, understanding risk reward, and making a realistic risk reward. I can make risk reward anything I want. My target's 1 million points up, so my risk reward's 1,000,000-1. Well, that's not really realistic. So trading is about risk reward, discipline, and good setups. Are there questions? I know some people, I want to go through the indicator real quick here, setup stuff. So these red and blue dots that will appear, they're crossover, cross under alerts. It's just a methodology we're working on for squeezes. We're trying to identify a red dot is a short squeeze. So you see they came down into the blue closeout, and then a blue dot is a long squeeze. That is not active yet. That is not something I'm confident in, the methodology of it yet. So while it's on here, I tend to keep mine off because they are not useful trading right now. We will have an update at some point that will come through. You'll update your chart and you'll update your chart and you'll update your chart and then you'll have the squeezes on there. So right now, uncheck those boxes and just ignore those. Typically, my stop is about 50 cents on the SPY. So if we got in right now and our strike was going to be, let's say, 558 for a long. So we're looking to go up. Right now we're at 557.60. We get a strike at 558. So at 557.60, my stop is going to be right around 557.10. Now, if I look on here and I look at 557.10 somewhere and I'm like, oh, okay, well, VWAP is right there. Maybe I'll make it a few cents lower so that VWAP can hold. I'll do that, but I usually make it about 50 cents lower. So in this case, like I said, it's 557.70. I'd make it 557.20. On higher volatility days when options prices are higher, I will expand that just a little bit because there's going to be bigger moves. So when volatility is up, we expand our stop just a little bit, maybe 10, 15 cents. So I might have a 60, 65 cent stop instead of a 50 cent stop because they're just going to swing so much before they go. They're going to pull back and then go, or vice versa. They're going to go up and then down. But those swings or those moves tend to be a little wilder on high volatility days. So we want to try to keep ourselves from getting stopped out and catching those moves, because when you catch a high volatility day move, they are usually really, really big. So that's why the volatility is so high. That's a pretty funny analogy, JR. When referring to risk reward, he says, "Don't eat like a bird and shit like an elephant." I like that. That's funny, and that's accurate. Don't take small wins and huge losses. That's just terrible trading. I need to check something here. I'm missing some things on my chart. 1 second here, guys, since we got a few minutes. Any questions out there? You guys have any questions you want to ask while we're doing this before we get going? Right now, we are doing 30% off the first month of the indicator. The code should be on the screen. It is monthly 30. So you get 30% off your first month. You also have the 30-day money-back guarantee. So if you don't like it, we'll refund it. So take advantage of that coupon. That is not a normal one. That is for these live streams, but after the live streams, those coupons go away. Do you have a 1-2-1-2 setup to the upside or just a 1-2? So I would not have either of those. I'd have an AB. And the reason is we're in a diagonal, so all waves are going to be ABCs. And in those instances, you're not looking for 5-wave moves off of this low. If we're talking about the C wave being a 1-2, I don't think we're there yet. I think the most likely scenario for up is going to look something like this. If they're going to go directly up from the lows, there's still a chance they can pull back deeper here. So you can get something like this and then up. But once they come back to the 560 SPY level, that is going to be a big level today. If they can push through that and break, they should squeeze. It should be a pretty powerful level for the bears. In other words, they're going to defend this level really hard. I'm missing a few things on my chart here, so I'm going to try to get them on here so we can see where those are. Indicator. Come on. Well, TradingView's not letting me view my indicators. There's my favorites, but that's not what I want. Let's refresh this. Jacob, do you always trade on the 5-minute chart? I do for day trading, yes. I find it to be the most consistently accurate. I find the 1-minute chart is basically useless because every chart above it supersedes it, which is every chart. There we go. There we go. Okay. So we have a high volume level here today for the 0 DTEs at 558. So this is going to be our first pivot. And our first support's down here at 555, and our first resistance is going to be 560. We knew 560 is going to be huge. And then our call walls are 562 and 564. So these are going to be really tough to get through. But if the bulls get through 564, there's going to be positive gamma squeeze happening. And that will be a pretty strong push because you have so many people with short sentiment right now. And you can see the high volume level sitting right on 560. Getting through that, there's a ton of puts sitting here, I can tell you. And so getting through that will turn that into a squeeze into 562 to 564, just depending on how aggressive the bulls get and the bears get. And then getting above these levels will continue that squeeze because then the market makers will have to start covering their gamma and hedging their overall bets. So if you think of market makers as basically a sports book, they want to be even on both sides of the chart and just collect the premium in between the calls and puts, or the buys and sells, I should say. So if you're if you can buy at 560 and sell at 560.05, they want to collect the nickel, right? They want millions of shares collecting that nickel. And they could care less if the market goes up or down in those cases as long as they're balanced. However, when the market gets too heavily one-sided, they have to hedge in order to cover their other side, which causes squeezes. And then gamma is the acceleration of delta, which causes squeezes to accelerate. So the gamma walls are a big deal. That's understanding where the highest option levels are for calls and puts. Right now, the put support is at 550 and the call resistance is at 562. I saw a bull rally, or a video predicting a bull rally in April and May. April is traditionally a very bullish month. It's one of the most bullish of the year. However, we are in a different type of April. We were last year as well. Last year's April was not good. At least the first part of it, we made the April lows, which are very critical. That's a very critical low right now in the market. If they break last April's low, I do believe the top is in and we're in for a much bigger correction. But April traditionally is a bullish month. So it would not shock me if we rallied here for several reasons. One, you have positive divergence on the daily MACD off of this last low from yesterday. Now they have to hold that positive divergence, and they have to hold the market above, the April lows where we could cascade into a waterfall. But that is positive divergence on the daily, which is usually really good at predicting bottoms. You have several different markets that we talked about yesterday in my room hitting critical support. You have an extremely oversold market. And you have critical support levels that we're hitting on the indexes as well. So a lot of reasons for a bigger bounce here. There were a lot of reasons for it before we made yesterday's low. But, they made that low on positive divergence, which is a setup for the bulls to continue to push. Now at the open, because we are in a buy cycle that is moving, that is, what's the word I'm looking for? Hitting completion. We will be looking for shorts at the open. So we'd be looking for put day trade. So I usually like to be set up for the trades so that I have everything set up and I'm not way behind and price moves too fast and I can't get in the trade. So I already have puts ready to go. We'll likely be using a 557 strike unless it takes a lot longer to get that put going. It could be a 556 strike. But if you look, we're trading into the high volume level at the open. We have a buy cycle completing, so the natural idea here would be that the market's going to come reject high volume, come back, test the lows at 555.48, and then see if it can break through to the downside. There's a ton of support right there, so we'll see. It could be a range day where we're trapped, in this 555, 560 area. And range days are good trading days in most cases, as long as the range is big enough. If you're trapped in a 10-point range, it's really tough, but a 50-point range is pretty nice. So we'll see how it goes, but we're looking for rejection here and a sell off of the open and see if the bears can test the pre-market low, and then we'll go from there. Thanks for being here, everybody. We're getting ready to open the market. If you joined the stream late, you can rewind. We went through our monthly results. We went through how to trade the indicator, how trend days work, how to set up the indicator, the counts. So check all that out if you missed it. Don't give us the sell before the market. That's not good. Trying to steal our trade from us. It's all right. We might get a spike up that stops it out first, and then we'll get in. Now, the market is down, and it was down overnight most of the night. But this is not what you would call a typical bearish behavior in the nature of they're going to try to push hard down today. Obviously, this can change. But it's a pretty weak overall sell currently. Okay, we did get the sell right before the open, which is annoying. Literally the candle before. We'll see if we get a spike back up, or if they can just run it down here into the pre-market low and get a sell cycle. That'd be great too, and then we get buy instead. Either way, the assessment was right. We're coming into high volume. We should look for a rejection and a sell into the open. We just got the sell, the candle before the open, unfortunately. You know, when you got the sell signal, we were at 557.56. They're down about 80 cents here. So this would have been a winning trade had we gotten it during market hours. Unfortunately, that wasn't the case. And here's the thing, while we're watching this bar go down and wait for a trade here. What we're looking for on day trades, the first trade is about a 7 to 10 point move, which is to say we get the trade. Let me get my path tool here. We get the trade. We move down. We're looking for 7 to 10 ES points. So about 70 cents to $1 on the SPY. And that should give us about a 20% win on our trade. So we take that 20%. We move our stops up so we don't take a loss on the trade. And then we just look for follow through. Right? We're looking for continuation on the second half of the trade. And if we don't get that, then we get a small winner. What that does is when we have losing trades, so if we get in this short and they stop us out, well, we're going to stop out pretty quick because we got a 50-cent stop. So the first take and the stop generally cancel out. And then all of your running trades, which we have tons of, all the trades that run past the 20%, this is all profit. And that's, you know, a general statement. It's not all profit, but you're generally canceling out your stop losses with your 20% wins. And then you're letting your runners run and moving your stops down with those runners so that you can still catch all of the move of the trade without all the risk. So quick spike down into this support area. Didn't quite get to the pre-market low yet. So we may get a chance, another chance at a sell here. They may stop the sell out and then reignite it. We'll see how that goes for setups. You missed it. I missed what? Options prices are pretty high today, so I am thinking that they're expecting a lot of movement. That doesn't mean we are going to have a breakout up or down. It can mean that. It definitely can mean that. But it can also mean there's just going to be a lot of volatility like this. So big moves, from here to here is a 50-point move. So big moves are possible today, definitely possible, especially considering in the overnights they came up and touched the second high volume level. They will very likely test that again at some point. While we're waiting for a trade, any questions, anything you guys want to know, any comments? Again, guys, the sell came the candle before the open, and we don't chase. We don't trade pre-market because these are very unreliable because the volume's so low, and when the market opens, the volume changes heavily, and that volume can be all buying volume or selling volume, whatever. But we don't take these signals, and we miss trades sometimes. That's life in trading. It's the cool thing about the market is it's open basically 24 hours a day, 6 days a week. You always have a chance to trade. Everyone always concerns themselves with missing a trade or missing a move, even if it's a big move. There's another move coming, there's another trade coming, there's another day coming. And if you use good trading philosophy, discipline, and rules, then you'll catch the right trades and you'll make money. I never concern myself with the emotion of trading because it's irrelevant and it's going to destroy your account. As I talk about all the time in my training videos, rooms, everything else, emotion is the destroyer of accounts. Every terrible decision you make is based on emotion. If you think of the biggest analogy I use is dating, think of all the stupid things you've said dating somebody, where you were either so in love that one day later you bought a ring even though you just met the person, or you were so angry you cussed at them, or did something to offend them in such a way that they'll never talk to you again, or called them drunk, or did something stupid. Emotion is the destroyer of accounts and makes bad decisions. Can't find the EMA indicator on TradingView. It's just an exponential moving average. Just type in exponential moving average and then set it to 21. It's not going to be called EMA 21 or exponential 21. It's just an exponential moving average, and then you set the settings to 21. Hi, Jacob. If I wanted to use the indicator for swing trading only, does that mean I don't need to buy the exchange futures on TradingView? Yeah, I think that's fine. If you're using it for swing trading, the issue you have, and it's only 10 minutes delayed, so if you're working off like the hourly or the weekly, that's fine. I think you could probably work that out. I haven't tested that, so I can't say for sure. But I think if you're trading on bigger than the hourly scale, then you're fine. Emotion is what I need to control. Yeah, everybody does. I mean, I've been doing this a very long time, and there are still days that I want to throw my computer out the window because the market did something unexpected. It's part of what makes the market fantastic and hard all at the same time. Is the VIX a good indicator? I mean, yeah. I mean, if you're just looking at correlation for like the VIX is going up, generally the market's going to go down. VIX is going down, generally the market's going to go up. I don't use it personally. It's built into the indicator. Some VIX settings are. So when the VIX, there's a lot of little tricks on the VIX about knowing when certain levels are hit or how they're hit or how price reacts when those levels are hit, whether we're going to see reversals or not. And that's all kind of built into the indicator because looking at 40 different things, it's actually 150 plus. I think there's 174 things in the indicator total that it looks at all at the same time. And trying to do that with your own eyes is really, really hard, if not impossible. It's impossible. So it does it all at the same time and gives you a real-time signal and allows you to get in at the best possible place instead of you trying to flip through charts and time frames and indications and crossovers and moving averages and everything else. It does all that for you at once. So it's like I said, it's forward-looking price action, and it's always going to look for tops. So you can see it caught the top here, right? Looking to buy down here, it bought here, got stopped, but looking for this bottom that eventually came. It's got the top on this one, which is a winning trade. These are pre-market, so they don't count or matter because this is all low volume trading. But just as an example, that's what it's looking for, tops and bottoms. Those are really hard to catch. Do you prefer trading SPX or SPY options? I trade SPY, and so here's what I'll tell you about trading. You can trade whatever you're comfortable with, and you should trade whatever you're comfortable with. I realize that there are benefits to the ES, benefits to the SPX, benefits to the SPY that some people find better than others. I've traded the SPY my whole life. It's what I'm comfortable with. It's what I've always done. I'm a creature of habit. So that's just what I trade. So I trade the SPY, but there's zero wrong with trading futures or SPX or a bull 3x bull or 3x bear fund. There's nothing wrong with any of those. Whatever you're comfortable with is what matters. And that's the overall thing, right? So trading is just there are probably infinite. I'll go as far as to say there are infinite trading styles that can succeed. The only barrier to succeeding in trading is you. And what I mean by that is stop losses, discipline, setups, all the things I talk about, capital management, knowing how to size your trades. All of that is what matters. The style of trading doesn't matter. You can trade spreads and condors and calendars and anything you want to trade and make money. There's tons of ways to do it. As long as you have discipline, you have good sizing, you have stops, and you understand your risk reward. All of that, you'll be fine. And that's the tragic beauty of trading is what I'll call it, is people complicate it so much, and it's really so simple if you really break it down. I would refer it to weight loss. Weight loss is really simple. Eat less calories and exercise. However, doing that is really hard. What is your advice on overtrading? I make good wind during the day, and by the end of the day, I struggle to keep my win. So there are a few things you can do. One, you can follow all the rules we put forth in the indicator and stop trading at 10 o'clock. Take only the trades that matter, have good stops, do all that. You can follow the exact methodology we use. Two is if you have good wins, you can set a goal for the day. If your goal is $100 and you hit that goal, you can just stop trading for the day. Greed and boredom and those are the two big ones. Greed and boredom are the reasons people overtrade. They think that the market's going to keep running forever in their direction, or that the setups are great, or blah, blah, blah. And so they keep going after it, and then they get frustrated, and then emotion kicks in, and they get mad and double down. And people don't like to be wrong in general. And so when a trade doesn't go your way, that means you're wrong. But you're going to be wrong. So you have to learn to accept that fact and just say, there are days that I'm going to be 0 for 5 trading, and there are days that I'm going to be 5 for 5 trading. I tell my traders all the time, do not get too high when you are winning, and do not get too low when you're losing. Winning streaks happen, losing streaks happen, but if you're trading properly, the winning will outweigh the losing. It always will. The best traders in the world have lost 20 trades in a row, maybe more. And that's why sizing is so important. If you're putting 50% of your capital into a single trade and you lose 20 in a row, well, you're going to be real sad at the end of those 20 trades. If you're putting 1 to 5% of your capital in and you lose 20 trades in a row, you're still going to be sad because you lost 20 trades, but not nearly as sad. And you're going to have a nice bank account to still trade with, and everything's going to be fine. People want to get rich today, and that's not how the market works. If the market worked like that, everybody'd be millionaires and it'd be easy. Everybody sees somebody make $10,000 on a good trade, and they're like, wow, I can make $1 million doing that. Maybe. You might get lucky once, but more often than not, that's going to blow up in your face. We don't do get-rich-quick schemes. We don't do scams. We don't do anything but solid trading in my room, and that sounds really boring because it is. Solid trading is boring, but it makes my bank account go up. Oh, thanks, Jack. JG and PT are the goats. Join the Discord, strangers. Jack's nicer in the room. Really slow, choppy open here. Thank you for mentioning those two words, greed and boredom. Yeah, I mean, that is exactly what it is. That's the only thing it is. I spend more time teaching what not to do than what to do, because what to do is easy. What not to do is hard. Are you live every day? I need a community like yours, and I'm glad I found you. In my room, yeah, I'm live every day. On YouTube, no, I don't do this every day. This is once a week. You'll get this, and then I do YouTube updates, which I guess I may have to change. That didn't go over very well. Stuck in the range, long over 560, short under 555, chew up in the middle. Yeah, but 560 to 555 is a 50-point range. So there are going to be solid trades to be had. There aren't any yet. I mean, this sell, should it have been at the open, would have been a winner. Not anything to write home about, but this is a big deal to understand. Not every trade is going to be a $10,000 trade or even a $1,000 trade, but $50, every single day of the year raises your account quite a bit. And then if you sprinkle in some 500s, thousands, 2000s in there, that works out well. Bulls breaking out over the HVL here. Next common target's going to be 5560, or I'm sorry, 560. We're not on the ES. 560. It's the next high volume level. It's also the pre-market high. I would look for a definite rejection here. When I say rejection, I don't mean that they're going to go up and then fail like this. I mean that they're going to hit this level and pull back some. So this is the first place I'd look for rejection and possibly even a sell. However, they are above the 21, even though they're getting a little extended from it. And they're approaching the high. So if they come up here to the high and they reject back to the 21 and then break out over the high, that's the start of a trend day. So we need to be cautious of that. How to get to your room? Is there a subscription fee? There is. If you go down below, you get a 7-day free trial if you want to check it out. If you go down below the video, there should be a description. And in that description, there's a link to my website and the page where they're at. You can check it out. There's a 7-day free trial. I give you a free trial for the rooms. I give you a 30-day money back guarantee for the indicator, guys. I don't do things because I want money. I mean, I run a business. I do want to make money, but I don't do them because I want money. I do them because I know that they'll help you. And if they help you and make you better, you'll want to have them, and then you'll pay for them. So the reason you get a 30-day money back guarantee is because I want you to try it, and I want you to see what it does, and I want you to understand its abilities and power and how good it can be if you use it right for the indicator. And the reason you get a 7-day free trial for my room is because I want you to get in there and see what it's like and make sure you like it. You may hate it and want to get out, and then you don't have to pay anything to figure that out. You get to be in there for a week. You can not take a single trade that we do. Just sit on the sidelines, listen and watch for a week and say, this is good or bad. You never spend a penny. You never are at risk of anything other than trying something out. And there's a negative connotation of people on YouTube that are scammers or idiots or both, and I completely understand that. I am neither, and I'm pretty upfront and trustworthy as far as, and honorable as far as, if you're unhappy, I'll work with you. If you got in there for the whole month and wasn't what you thought, and you say, hey, I know you have a 7-day thing, but this just wasn't for me, and blah, 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 I'll work with you. I'm not here to be a jerk or do anything other than help traders. That's really what I like to do. I like to trade. It's boring. So having people around to trade with me is fun. Helping traders is really fun. The best thing I get is emails saying how much people have changed their lives. I've had several traders trade to get out of my room because they've learned to trade on their own. They learned how to fish, and that's the best thing ever. So, I do well trading. I don't need to do this, but I like helping people, and I'm a businessman, so I'm going to charge money for it. But not in a sense of I'm going to charge money because I want your money. I want to charge money and help you and run a business, and we exchange value. Jordan Peterson said $28 a day will make about $10,000 at the end of the year. Yeah, I think that's about right. $10 would be $3,600, so that's $7,200 for 20, and then almost, and that sounds about right. Took that shortstop trigger, 5 points ES in the bag. First target of the day hit. After ISM, I expect the market to flow easily. Probably true. That's going to be the catalyst here in about 8 minutes. Now, what JR did there is an aggressive strategy. There's nothing wrong with this strategy. Like I said, all strategies can make money if done properly. On the weekly chart, we use this strategy because the moves are bigger. But on the 5-minute chart, if you get a sell and then you see a sell stop, a lot of people, especially on trend days, now on choppy days, not as good. But if you see a trend start to form, so if we go back to here, we had a trend day up yesterday. If you took the sell stops, that was probably a pretty good one. This sell stop was probably okay. This sell stop it was probably okay. This one was not. But a lot of people take, on trend days, they take the stops instead of buys and try to make money there. It's not a terrible strategy. To me, it's a little aggressive on the 5-minute chart because the moves just aren't as big. But it's not a bad strategy. It's just a strategy. It's an aggressive strategy. And all strategies used properly will make money. I would have serious withdrawal if I sat for a week without taking a trade. It's actually awesome. When I'm off for the week, that's awesome. I'd love not having to deal with watching the market and watching a bar go up and down for 8 hours a day. It's like I said, it's boring, but at least there's people here to talk to and trade with and teach and make it a lot more fun. One of these days I'll live stream and we'll get one of those opening bar trades that just go. Those are the fun days. And we get a lot of those. There's a fair amount of days where the market opens and the first or second bar you get the buy signal and it goes off, or the first or second bar you get the sell signal and it drops, and it's awesome. Those are great days. Last Tuesday was a great day. I mean, we had 2 amazing trades, or 3 amazing trades on that one, and did well, and everybody got to stay on for the live call and stuff. So that was a fun day. Okay, there's our first sell. So we're going to take 557, and our cost is 168. And our stop is going to be 558.50. And we take the trade as soon as we see it. So as soon as it, hold on, let me get the room updated first. There we go. Okay. As soon as it flashes, we take it, because it flashed up here, right, at about 557.95. And if this bar moves down rapidly, that's the whole trade in one bar. So you don't want to wait till this bar closes, because then you miss the trade. And it gives us a better entry to stop out and stuff. So anyway, we're in at 168. Oh, dang. $2 is our first take. So we will try to, let's see here. Let's get this set up. So at $2, we're looking to take off half of our trade, because that's a 20% win. And there it is. Boom. So we close half for $2. We set our stops to 165. And this is a great example of why we get in as soon as it flashes. So again, way up here it flashed, we got in. This whole bar is the first part of the trade. So if we waited till down here, they're already testing VWAP and stuff. This is going to be support. They're also coming into this heavy support at 556.86. So if we had waited, we'd get a terrible trade entry. So as soon as you see it flash, you take it. If you get stopped out, you get stopped out. That's part of trading. So now we have our stops at 165. I'd like to see them test the pre-market low down here at 555.48. But I'll probably honestly take another portion off here at about 556 or so. Do we take the trade as soon as we see it also on the weekly chart, or do we wait for Friday? And JR's right. Weekly, you wait until Friday, and those are bigger moves. So again, we want the weekly to print. It's way too hard during the week, because the week can move up and down 200 points, in total. You could still get that sell signal. You could get stopped out. So you want to be waiting until the weekly closes. Did you sell calls or buy puts? Buy puts. I don't ever sell. You can sell, again, winning strategy if you use it properly. However, when you sell, you are uncovered, and that is ultimately infinite risk, and that's not something that I want to be a part of very often. So, do you just do a market buy? No, I have my trade completely set up, and as soon as it comes in, I have a pretty wide, so I look at the spread. So like right now price is 189, so I might have a spread, 183. I might have a spread that goes from 180 to 195, or 185 to 195, so like a 10-point spread, 10-cent spread for my buy area. and that way I catch so I can get in as quickly as possible. Okay, let's see what happens here at the top of the hour. See if we can hold our stop and then see if top of the hour, this looks like the bulls are trying to buy it into the top of the hour. So we'll see. 40 seconds left. It may stop us out here. And see, if this bar closes bullish, that sell will never even be on the chart, and yet we have a winning trade. And so when people are like, hey, you didn't tell us about the losing trade here that didn't appear. Well, one, I can only tell you what's on the chart because I can't tell you about this winning trade. I can't be like, oh, yeah, this was a magical win that you guys didn't see. I also can't tell you about those losses because you can't see them. I understand they're there, and I'm not trying to. Oh, that's a good move. Perfect. Oh, come on, follow through. I understand that it's not a perfect system, but I can't tell you what's not there, in other words. They moved it too fast. They got it down there to 230. I was going to take some at 230, but they spiked it and recovered it pretty quickly. They were able to close it down below VWAP on that last bar, which is good for the sell. It doesn't mean it's perfect. They can get it right back up above it, but getting below it on the close was solid. Now we just need a little bit of follow through here. How far out do you go and what strikes? For what kind of trading? Day trading, I use 0 DTEs, so expires today. And usually, depending on how overpriced options are, like today they're pricey. They were like 260. So I went one strike out of the money there, which got me down to 170 or whatever, 168. So it just kind of depends on pricing of the options. And then on weeklies, you generally want to go a couple months out or more, depending on what I'm looking for. Okay, we're going to close another half here at 2. Hold on, let's let it settle. 245. And we're going to move our stops down or up to 195. So this is a example of where greed takes hold. So this market's moving down pretty good, right? It can keep going. There's no question about that, but this is good support. They hit this low already in the pre-market, and just below that is more support, and very often if they're going to reverse, they will go like that very quickly. So you don't want to be waiting for them to hit exactly the pre-market low or exactly whatever, because you're going to miss money and you're going to be too late. The greed takes over when people want to get it all the way down here, and then they end up starts to go back up, and they're like, oh, it's going to come back down though. This is just a little bounce, and then it does this, and then they turn a winning trade into a losing trade. It's okay. We still have a runner. We still have a quarter position that can take us lower, and we'll run with this. And we've already made, 32 and 45, almost 80 cents on $1.60. So about 50% on our money on the second part of that trade, and 20% on the first part of that trade. So we're already in a great spot. And let me tell you, if you're risking, if you're making between 20 and 50% on your money every single day, you're going to be real happy at the end of the year. Real happy. All right, we have 195 stops here. We have a quarter position left. We'll see if they can continue down. Right now, we got almost the exact low. Now that's right now. They can go lower. And so many people will see this little move here and not realize that this is a 50% win on the second part of your money and like a 30% win overall right now. They'll just think it wasn't that big a move. It was 2 bars. Yeah, 2 good bars though. Mr. Good Bars. So let me tell you a quick emotion story of how that works pretty well while we wait to see if they're going to break down here and give us any more. Mentally, what you think when this is coming down is, okay, they're going, this is going to go at least to the pre-market low, if not lower. So you start thinking, I'm going to let it run a little further, little further, little further. And then they do this, and then you get scared, and you're like, oh man, I'm going to take it out, take it out, take it out. So you end up closing way back up here, and then they did push it back down. So you missed this, got out here, and then missed the re-push. So you never got out down near the lows. Now, if you'd have just taken the first one, then they came back up. If they had stopped you out, you'd have had a close at the lows. And if they come back down, you still got a runner. That's where emotion crushes people. You also have to pay entry fees when trading. I think you mean like contract costs. Yeah, you do. Depending on your broker and what you trade, I think I pay 10 cents a contract, and I trade 25 contracts, so it's like $250 25 contracts, Johnny. It's like $250 a trade or something. But I'm a high volume trader, so if you don't trade as much as I do, you might not get that price. They give me a discount because of how much I trade. So you may have to pay a quarter or something for your contracts. Somebody told me they were paying $1 a contract. Get a new broker. Do not pay $1 a contract. That's outrageous. Or call them. Call them and say, I want a better price. All right, we're hanging in there. Bears are trying to break down here. Okay, so for the last quarter, I always just trail stops. I don't. Sometimes I'll take a little bit, but we're gonna move our stops down here. Now we are at. Let's see. Well, let's see where we're at here. Let's move our stops to 240. And they just spiked the pre-market low, so a downtrend could ensue here, which would be kind of a wave 3 of C, which is what we're kind of looking for. So we ended up getting this sell, and we got it better, right? So this sell would have been a winner, but they took it back up, stopped it out, gave us the sell at the same exact spot, basically, and much better outcome. Okay, our stops are at 240 now. They spiked the pre-market low. If they fail here, so this is what would be considered a failed breakdown. If they fail here and get it back above VWAP, then we're likely to come at least to the pre-market high, if not more. Because what you have then is a failed breakdown. So they have the pre-market low. They're coming down. They're going to try to break it down. They fail. If they get it back above VWAP, then you're going to see a squeeze because all of the shorts that got in late will be squeezed out. That's like some Picasso stuff right there. Abstract. So that's something to keep an eye on here as they break the pre-market low. You want to see follow through now if you're a bear, because a failure here would result in a rip back to 560. This is working out nice. It absolutely is. Let's move our stops to 260. right, guys, hold on 1 second. I got to mark it. That's part of my job. All right. When you say moving stops to 260, what is that? Is that the option price? Yes. So we bought the option at $1.68. Our stop is now at $2.60. So the worst we can do on the last part of this trade is make 92 cents on a $1.68 purchase. So that's a pretty darn good place to be. And I will tell you right now, and I think I'll be backed up by anybody who trades in my room, this is a very typical trade and day. This is not an anomaly. Again, guys, 30% off of the indicator if you get it here now. I don't do that level of discount. Monthly 30 is the coupon code to put in. I'm not sure how to trade options. I think I would trade the cash session. Yeah, I mean, that's perfectly fine. There's a bull 3x fund and a bear 3x fund that some people use to trade instead of options. So if the market moves 1%, you make 3% on your money, or obviously conversely, it goes the opposite. If you lose 1%, if the market moves 1% against you, you lose 3%. But it's a way to kind of leverage. Let's see here. Let's move our stops to 290. And now we just trail until we get a bounce that takes us out. And does that mean they could bounce up, take us out, and continue lower? Yes, it does. And it happens quite often, actually, because the market's not going to move straight down forever. It's going to bounce. But we still caught a huge move. You know, if they do this and then, you know, bounce up and then come back down, then so be it. That's part of trading, but you just made a bunch of money on your move. Now, if they do that, I got the wrong tool here. Don't chase. So if they come here and you get stopped out and they start back down, don't chase here, because quite often they test the low and do this. They spike the low and do this. Don't get greedy. You caught the move. You caught a big portion of the move. And if you know, even if it continues to move in a big way to the downside, again, at the end of the year, if you make 40%, 30% on your money every day, you will be really happy. SPYU, now a Forex leverage, recently opened. Oh, there you go. SPYU Forex. I didn't know about that one. I don't trade any of the leverage funds, but I know about XL and XU. Okay, I am going to close another half here at, let's see here. Hold on, let me get over to the screen. I'm going to close another half at 360 here. And set my stops to 310. So now my stop is almost 100% win. And I just took off over 100% win there for that part of the trade. This indicator does a good job of helping you stay in a trade. I'm still in the phase of my losers are bigger than my winners. Yeah, you have to fix that. You got to use stops. and you got to understand risk reward. You cannot have losers bigger than winners in general. Um, so the crazy thing is fear is more powerful than greed, and this is one of the major contributors to losing trades. It is that if you're greedy, you're like, oh, I'll stay in the trade because I'm in the green, I'm up money, it's fine. But when it starts to come back down, you get scared and you're like, I don't want to lose all my money, I don't want to lose all my money. So you get out here. You didn't get stopped out, you just get scared and get out because you don't want to let it come all the way down to the stop. Then it holds a higher low and does this, and you missed out on what you should have had. And so your gain is really small in comparison to where it should have been. So you really have to use the stops and just completely ignore everything else. Don't focus on the money. Don't. I know that's really hard to hear and understand, but if you focus on the money, you will always make bad decisions, because as soon as it starts to go down, when you start to lose money, you panic. And as soon as that happens, people make bad decisions. Don't focus on the money. Focus on good, disciplined trading and use stops. All right, our stops are at 310 right now. We took some off there at 360. We'll see if we can continue to move down. So one of the reasons we took profit here, you're coming into this week's average, which can definitely cause a bounce. They spiked the high volume level with pretty good movement. So a lot of times you'll see a spike and reversal. So we didn't want to get caught there. So we take some profit there, and then we let it run again. You never have to keep your whole trade in, and in fact, you shouldn't. You should never get to your target price with all of your contracts unless you're trading an incredibly aggressive style that will likely need really a lot of willpower, patience, and really good risk-reward setups. You never want to get to your target with all your contracts, because then you're just being too greedy. Remember, bulls make money, bears make money, pigs get slaughtered. How do you apply EW theory to trading like this? I don't. Day trading has zero to do with Elliott wave theory. Now, in the big picture, I am looking for certain things. So I'm looking for the market to do certain things. But remember, we're only looking for the initial move is only 5 to 7 points. And that's hardly ever going to change how a wave looks in Elliott wave theory. So I don't cross over Elliott wave into this. Unless I'm swing trading, then I don't mind looking at the overall setup and saying, okay, we're getting a sell signal here. We're setting up for a wave 3 of C. This should be a really strong move. I'm really happy with what we have in front of us. But even so, I trust the indicator because I'm really proud of it. I think it's really well built. Is it perfect? Nope. But none is. I trust the indicator, and it has proven to be financially very, very powerful. I post all of my results, guys. I showed you guys at the beginning what our first 3 months of the year were. I can show you the whole year for, hold on one second here. I can show you the whole year for last year. And I can tell you that we made a lot of updates to the indicator that have made it better. And we're seeing those results in the first 3 months of the season, first 3 months of the year. So here are last year's results. And what you're going to see on here is you're going to see some losing months. This is why I say don't focus on the money. Focus on the overall outcome, good trades, and discipline. So last year in January, we made $3,000. This year we made, I think, 11. What did Matt say? Hold on. Matt's got my. This year we made 14,800. So an $11,000 improvement on 25 contracts. Last year in February, we made 4,700. This year, we made 4,800, very consistent. Last year in March, we were negative 550. This year, we were positive 10,000. And then we had 2 losing months down here. But for the most part, you have winning months, and your winning months are big, and your losing months tend to be small now. November is 2 years in a row now. November's low volume trading really messes with the indicator because volume's a big component of trading. And the low volume trading in November has been tough for the indicator. This year was particularly bad. But again, you have to look at the big picture, and you have to trade understanding good setups make money. So I'm not here to tell you it's perfect. I'm not here to tell you you won't lose money from time to time or from a month here or a month there. I'm here to tell you that overall, if you follow the indicator and you do the trading rules that we use, you're going to make money. This is a 35% gain on a $100,000 account. Right now, this year, we're already on a pace for a 125% gain on a $100,000 account. And that is incredible. I mean, obviously, I think that'll come down and even out. There's a law of averages. But if you can make 35% on your money, that's a pretty good place to be. Is there an indicator that shows the weekly average? What do you mean? Isn't it time for a VWAP connect? They're pretty far away from the 21 and VWAP, but when they get to selling, sometimes that doesn't really matter. We need to move our stops up. Let's move our stops to 330. See, what you get from me is genuine in the sense that I'm not here to hide from bad months or bad trades or losing trades. I shouldn't say bad trades, losing trades. I'm not here to tell you that this is a get rich quick scheme or that you're going to get rich tomorrow. I'm here to tell you that disciplined trading works and this works. And if you use it right, you will make money. But then you make over 200G selling your indicator. What I make selling it is irrelevant. I mean, it's here to help the people, and I think that anyone who wants to chime into the chat and say what your experience with the indicator is, you can please do so. Stops to 330. I don't know what the comment about that is, JD. Like, are you saying it's a bad thing that I make money giving a tool to people that helps them make money? It's like saying, yeah, you made money selling tires to me for my car. Yeah, and it helped you not get flat tires and drive. Like, that's what businesses do. They sell things that help people. So making money isn't a bad thing. That's what I'm here to help you guys do. That's what I want you guys all to do is make money. And I think if you took the trade with me today, you did that. All right, we're about to be just about. Yep, there it goes. All right, we got stopped out there at 330, guys. So our stops were about 100% gain there. Not too bad. On the last portion, I'd be ready for a buy flip here. I'll get you the average exit here in just a second, but I'm looking for a buy, so I want to be set up for that. One of the things, and I'm not, never mind, I'll leave it alone. I'll leave it alone. I'm using the indicator since last year and I love it. It works. Thank you, Sam. I assume there will be a buy signal. Maybe if they get the conditions right. So I would look for a buy here. Yeah, I mean they're far away. We're looking for a run probably back up into the VWAP area minimum, and if we get that, that's awesome. We are gonna take that strike there. Get that set up. Okay. But if the conditions aren't right for a buy signal, you're not going to get one. I mean, eventually you will if they continue to move up because things will be right. But the confluence is a big factor. So all the charts have to be doing the same thing because that indicates broad selling or broad buying, and that also is a very strong factor in the market moving. This was a really strong sell down. You know, they sold down 50 points there pretty quickly. So it will take a while for selling pressure to stop. I'm not going to love this entry, I'll be honest with you. We're getting too close to where resistance will be. Indicator is looking at so many things for you that helps you focus on taking the trade and watching the price action instead of watching indicators and getting confused. It's very helpful. Thank you, Sean. Okay, breaking back through the pre-market low here. If they can sustain that, that's not a great sign for the bears. Again, back through VWAP and the 21 will be a back through VWAP and the 21 will be a sign of a failed breakdown. And we would look for the bulls to potentially run at least back to the high, if not 560, which is a high volume level up there in an area I would suspect would at least produce a rejection or consolidation. Guys, I am running a special that's not on the screen. Obviously, you see the monthly 30 special right now. You get 30% off your first month of the indicator, and you get a 30-day money-back guarantee with it. If you get the yearly indicator, I hardly ever discount it. I did the last 2 live streams for March Madness. I said I would do it here if Kentucky won. They did not. Sorry, guys. And I don't discount the yearly hardly ever. But if you get the yearly indicator, I am giving you Trade Waves Academy 50% off. So that's a $500 course, but that also gets you the Elliott Wave 4 Beginners course. That also gets you the Elliott Wave Advanced course. Those 2 courses alone would cost you over $200, and you're getting 50% off of Trade Waves Academy. So that teaches you how to trade price action. It's everything that Elliott Wave isn't. So the Elliott Wave courses, the Advanced and Beginners, cover Elliott Wave, and Trade Waves Academy covers everything else, like price action, like trading, like mentality, psychology is what I'm trying to say. All of those things are covered. So just keep that in mind. How often do you give live analysis for your subscribers throughout the day and in the afternoon? All day, throughout the entire time the market's open, I am giving live updates. Whether it's trades, key levels, support and resistance, counts for Elliott Wave, all of that is in there each and every day. And the advantage of being in my room, I will tell you this, if you're struggling with trading, the indicator probably won't fix it because you need to fix yourself, not the indicator, not the trades, not anything else. But if you're in my rooms, you can simply trade when I trade. I give you every single trade we make, and you will be successful. That way you have the stops. You have the ability to say, if Jacob isn't trading, I'm not trading. And, if you do that, that will fix a lot of problems. And I would encourage you to come in and do that for a month, see what you think. And if your trading hasn't improved tenfold, well, tenfold's big. If your trading hasn't improved, that's what I'll say, then maybe it wasn't for you, or maybe, I don't know. I think you'll find that it does. Again, you get a 7-day free trial, so you have nothing to lose to come in and just even listen. Having the indicator and having only one thing to look out for is beneficial in high volatility markets when price can change very quickly. Thank you, Paul. I agree. I think it makes it very, very simple. On the indicator, the new people may not know that the sell is still there. Yeah, so we talked about that a little bit in the pre-market. Right now, you're in a sell cycle. The sell cycle is quote unquote complete, which is to say that when this comes, it won't be a sell stop, it will be a buy. But we are still in a sell cycle right now, even when the buy signal comes. So when the buy signal comes, that doesn't mean we're in a buy cycle. That means that the sell cycle is extremely weak, and we're looking for the buyers to come in and create a buy cycle. That's how we're able to get in at the lows and the highs. So, we got in just off the high here. This one's taking a while because this was a very powerful sell. So the indicators going to want to see a lot of different things kind of fix themselves. There it is right there. 186 is our entry at 556. Our stop is going to be 555.20. So each time I announce these trades, I'm also posting them in my room, my chat room. So you have these trades available to you instantly. But if you have the indicator, the trade is already coming, because it takes me a second to see the buy signal, get my trade in, and then get the trade out to the people. So if you have the indicator and you're in my room, you already know the buy cycle came, or the buy signal came. You already know that we have that. So you can already have your trade in, but then you get the stops and the takes and all that stuff in the room as well. Again, I don't love this entry. We're pretty close to VWAP in the 21. I'm not sure we're going to be able to get, they're going to have to push through it to get a winning trade, which is tougher to do. It's not impossible and it's not unlikely. It's just, I would have rather had the trade down here. But I trust the indicator. It knows when conditions are right for the bulls to break out or bears to break down. And so it sees that here and it wants us to try it out. Now, as we talked about earlier, the buy signal came and went, just like the sell signal did earlier. The buy signal may come back by the close of the candle, but we take it as soon as we see it. So we saw the buy signal, we take the trade. Because again, just like this candle, this was a winning trade already just in the first bar because we got in way up here at the top. And then, of course, we got follow through, which was great. Actually, I want to keep this here. I also implore a 3 strikes and you're out policy. Um, so if we're trying to trade one day and we get 3 trades in a row that don't work out, then I'm just done trading for that day. I don't need my mind to be worried about losing more trades. And if it makes a move later in the day that we didn't get, so what? You just want your mind to be right trading. And when you get on a rapid fire losing like that, you don't want to continue to throw money after it. You just want to say, hey, tomorrow's a better day. Are your chat rooms in your website? It's on Discord, actually. Unfortunately, putting a believe me, I've looked into this, and it's quite a expensive undertaking to put a chat room that is worthwhile on your website. So I haven't done that yet. So we're in Discord right now, but that is the ultimate goal. Is the website will house everything, but unfortunately for the moment, we're in Discord. What if the buy signal does not come back in the time the candle closes? Does that mean we exit the buy? Absolutely not. You exit the buy when you hit your stop. Or when you take profit. But you don't exit the buy because the buy signal went away. You exit the buy because the stop got hit. Because the buy signal went away, and now it's right back on the next candle. And had you exited here, then you'd have to re-enter, and that just doesn't make any sense. So again, by entering where we first saw it flash, we got a better entry than where it's actually going to close. So if we get a buy signal that closes here, this is a worse entry over here than we got because we got in right when it flashed. This area here is going to be tough. They should have to grind through because you got VWAP and the 21 right here. So this is going to be a little bit of a tough area to get through, especially on the first try. So I do expect them to chop and or reject here. I just hope they don't reject it down to our stop. Hopefully they can hold this little ledge of support and then push up. 186 was our entry, so that's 37 cents, which is 3 carry 1 223. So we'll just call it 225 will be our first take. Should we get to that level? Again, guys, 30% off the indicator the first month anyway, with code monthly 30. So you can try it out cheaper, and you also have the 30-day money back guarantee. So if you don't like it, then so be it. It is what it is. Where's your stop? 50 cents on SPY. Yeah, so we got in at around 55.70, and I set the stop at 555.20. So about 50 cents. Like I said, sometimes in more volatile markets, today's got a little more volatility on it. I could have made it a little wider. But I don't necessarily want to. We are counter trend to the day after this sell. So they got to get back above this line to start a new uptrend. So we don't necessarily want to increase our stop there. And the overall pattern is still down in the bigger picture. So the bears are in control. So anytime we're overall counter trend, we don't necessarily want to extend. There we go, punching right through. Good job, bulls. Okay, let's close half here. I actually got 230 because it moved so fast. So we'll close half for 230 here, set our stops. That's why I say the indicator's smarter than me. I didn't love the entry because it was so close to VWAP, but it knew it was going to push right through. It didn't know, but it had the right conditions to push right through. So yeah, let's put our stops at where are we at? 250, 190 for our stops. Ooh, I love it. Bulls go. Okay, let's move our stops up to 230. That was a nice 40-cent rip. So now we are guaranteed a little over 20% on this trade. You guys having any fun out there? It's a pretty good day. I still haven't even got the average for the first trade. Let me go do that while we're waiting here. Day trades, let's see here. Okay, so we had, oh boy, that is a big calculator. All right, we closed half for 2. We got stopped there. Stopped at 330. Okay, so that gets 30 cents. That's 15. That's 345. Okay, 345 plus 2. 2 plus 2 divided by 2. So 248 was our average exit on the first trade. And if you take that minus 168 divided by 168, that was a 47% win on our first trade. So that's pretty good. Can you explain the 230 stop? Yeah, that is your option price. So you pay for options. We bought our option for this one at 186. I'm sorry, was it 186? Is that right? I think it was 186. Yeah, 186. And now our stop is $2.30. So the worst we can do is make 44 cents on this trade. And 44 cents times, 100 is $44 times 25 contracts is pretty good. It's about $800, $900 for me. For you, it's whatever contract size you're trading. 10 points on ES, total 15. Might be done for the day. Back to work for now. Thank you, Jacob. No problem, JR. Glad you joined. Have fun at work. Come back and get the indicator and do this more often. Said I missed the first trade, but this one worked out well. Yeah, this one's not doing bad either, John. This indicator work only on an S&P and US 100 or gold as well. It works on everything. So any indication, any stock you want to put it on, you just have to set. So when you go in to a different stock, you go to your settings. And right now it's pointed at so it tracks the ES and the NQ. This is why you have to have real-time data, because the futures markets are being tracked in the underlying of the indicator. And that gives you a higher probability of winning trades. So if ES and NQ are doing the same thing as the SPY is likely to succeed. And if you switch, so let's say you switch to NVIDIA, you just need to click in here and change this to NVIDIA, and then click on this one and change it to NVIDIA. So you just want both of them to say whatever stock you're on instead of the NQ and the ES. And then when you come back to the SPY, you just put it back on this. So you just switch it over to whatever stock you want to trade it on. So I told you that this would likely be a failed breakdown. If they got above the VWAP level, that we would likely see them squeeze back to that pre-market high, and that's what we're seeing now. But we are getting back to this high here. So I do want to close another half for 330 here, because we're getting into heavy resistance. So we're going to close another half of remaining for 330. And we're going to move our stops up to 280. Again, guys, yearly you get 2 months for free. And you get TradeWaves Academy 50% off if you want it. So here's the rejection off of this high, by the way. That's why we take profit there, because they can reject all the way back down, or they can reject a little bit and keep going, but we protect our gains. They pull back and they push through. We still have a runner to take us higher. Options do come in packs of 100, yes. Are you considering the tariffs that will be in place tomorrow, or does news don't count? I think you're asking if I care about the tariffs, and the answer is no. The tariffs are already in the news. Everybody already knows what's going on. That's already priced into the market. I would say tomorrow is a big sell the rumor into that and then buy. I think I've been saying for a while, before April 2nd was even announced as a thing, that we should be looking for a bounce. We saw one to 5,800. Now they've given us positive divergence on the daily chart, which is a huge indicator of a bottom. Whether that's a temporary bottom or a major bottom is to be determined. But I would expect tomorrow to be, depending on how today goes. Now, we got to see how today closes. Obviously, if today starts to turn nasty, then things can change. But as it stands right now, I would expect tomorrow to likely be either a non-factor, like a choppy, sideways, shitty market, or bullish. Amazing day again. It is, Sean. We have lots of amazing days, and I love them. And I'm glad today was a good one because we're live streaming. Like Ira says, are there losing days? Absolutely. But the winning days far outweigh them, and trades like this far outweigh the small trades. It's all a matter of perspective. If you use it for 3 days and you happen to catch the wrong 3 days, I could see where you're frustrated, but you have to also understand that that's why you get a 30-day money-back guarantee, not a 3-day money-back guarantee, because I want you to see the performance for a whole month before you make a decision. Today is a ranging day. How indicator does in volatile day? Does really well. Does well in all days. I mean, let me be clear about that. Trend days suck for day trading. I don't know if I can be more clear about that. So when you get a trend day, are there times, like if today turns into a trend day up, then we've caught basically the absolute, not the absolute low, but a pretty close to the low. If it turns into the bulls are just going to steamroll and run out of here. Had they had a trend day down, we had basically the top. So we had the top. We're just off the bottom because this was a pretty strong sell. But looking at this selling, who's over here buying? Everybody else is looking, which is why the squeeze happened, by the way. Everybody else is looking for this. And, we were on the other side of that. So I think today is a volatile market, by the way. You can call it a ranging day, but a 50-point move down, a 50-point move back up, that's volatility. Do you live stream every day for your members? No, we do a live call every day at 10 my time, 10 Pacific time, 1 p.m. Eastern time. We do a call every day where we go through all of the charts. So we go through Bitcoin and gold and the Mag 7 and silver and RTY and everything else. And then also any charts that any of my members ask for, we go through. That is after trading is done. I'm done trading at 10 a.m. my time. And then we do the live call. But I do give out every single trade in real time. And then most of my members, or a lot of them, have the indicator. So they know the trade's coming. They can see the sell signal. So they're ready before I put the trade out. But the benefit is they get the stops, they get the takes. Where are we taking profit at? Where are we doing stops? And it really fixes a lot of the mental game. When you don't have to think about what to do, you can trade easier, I guess, or trade with more confidence. How's that? I just took profit, and here's my normal mistake. I will go now short, and rather than stay out and wait for a setup, silly me. Yeah, you don't want to jump the gun here. You want to You want to give the market a chance. You want to have stops and just let your stops ride. And that's why the indicator is great, because when it's time to sell, it says, hey, it's time to sell. When it's time to buy, it says, hey, it's time to buy. You don't have to worry about it. And you can let your winners run until they don't, and then get in the next trade when you're supposed to. I have the indicator since the first day you made it available. Took me some time to get my brain in sync with it and suppress my ego. Ego is an MFer in life, right? Uh, I have, as I've matured more and gotten older in life and read a lot more books and done a lot of studying and learned about meditation and calm minds and how to decrease your emotional reactions, you find that ego is just such a problem. Like everybody that gets on YouTube and wants to comment, you're an idiot, this is going down. That's ego. Like, why do you care which way it goes? Care that you're going to make money and have an open mind to when you're wrong, because nobody knows where the stock market's going for real. They have a lot of great analysis. I think I have very good analysis on what's going to happen. But nobody knows where the stock market is going. So you should be ready for any possible situation. And ego will absolutely destroy your account. Absolutely. Can you explain how you select the call put contracts for the day's trading? So usually it's going to be about one. It's either going to be at the money. So right now we're at 558. So I might take a 558 or 559 strike. So one strike in or out of the money is what I like to do. And on more volatile days, it's usually one strike out of the money. So when options prices are elevated, like $2-3, which is outrageous, I try to get them a little bit cheaper by going one out of the money, because the moves are going to be big anyway. So if you're right, you can get it a little cheaper and still experience the huge gains. And if you're wrong, you just lose a little less. So that's what I do on daily. And then basically the same for swing, just further out. One or two strikes out of the money or at the money, just depending on price and what makes sense and what I'm looking for. All right, Bull's going to go ahead and try to push for the pre-market high here. Again, as I explained down here, once they failed this breakdown, very likely we were coming back to the pre-market high. Now, this is a heavy level up here, 560. So if the Bulls get through that, expect volatile squeezing. Bears will really get crushed here. All right, let's move our stops up to 330. As we approach the pre-market high here, I will take some off. This is going to be a very, very strong level, and I would honestly would not be shocked to see a sell come off of this level. But we'll let the last quarter run, because like I said, if they do push, if they do push through, they're very likely to squeeze up to 564 next. If we zoom out just a little here, let me move. Oh, geez, that's way too much. But you can see our next major level. So you have this major level here, 560. And then our next major level is 562, and then 564, and then above that, the Bulls are back in control of the short-term market. Now, this is short-term. This is not the overall market, but the Bulls above 564 are back in control in the short term. Really nice run up here from the Bulls. Bears gave us a nice run down. Good day, guys. Good day. Remember, you don't always have to close your full trade. You know, somebody said earlier they were done trading for the day, and you could have taken, half off or 2/3 off or whatever's comfortable for you, but take some profit and then let your profit run. That's how you maximize gains. Okay, let's close another half for 410. We're getting close to that pre-market high, and that rejection could be swift. So we close another half here at 410. We'll set our stops to 350. It gives us an extra 10 cents. So I have my stop at 60 cents here because it's an extra 10 cents. It's not a ton. I don't want to give up a ton, but just I feel like this pushback off of the 560 level, could be a decent pushback, and I want to give them a little extra room for not hitting our stops, so that if they do push back and then break out, we're still alive. But if they stop us, they stop us. We've already had a great trade here. Again, guys, monthly 30% off your first month of the indicator, and then regular price after that. And if you want to get the yearly indicator, you get TradeWaves Academy 50% off, which also includes the beginner's course for Elliott Wave and the advanced Elliott Wave course in that half off price. So really good deal. Here's the rejection. We'll see if we can hold 350. Once we do stop out on this live trade, that will probably be the last of the live stream. And that monthly 30 coupon is only good for the live stream. So just so you know that, it takes me a minute to wrap up and give everybody access and stuff before I shut it down. So you get about a half hour or so after the live stream's over. And I think I will conclude the live stream after this trade stops out, if it ever does. Hopefully that's at the end of the day. That'd be awesome. But in all seriousness, at the end of this trade, I'll go ahead and shut down the live stream and go from there. Thank you, everybody, for being on the live stream. I do appreciate you guys being here. Did you know these two trades paid more than your yearly price for the indicator and Jacob's room? I try to tell people, but they don't have to listen to me. I'm glad you said it, Sean, because it's the truth. I mean, one trade pays for the indicator for years, and it's, I don't know. I think it's the best one out there. I've tried a million of them, and I didn't like any of them because they were all backward looking. They all took too long, had terrible signals, whatever, too many signals. And so I wanted to build a better mousetrap, and I think we did. And, the proof is in the pudding. People want to backtest it. Backtesting is really hard because of the style of trading. You can't set stops. You can't see the profit takes. You don't know where we took profit and how much profit we took, all those different things. But I have over a year's worth of data that tells you that it absolutely crushes the market. Live trading, the way it's supposed to be traded, all of the data kills the market. And I showed it to you earlier. This year we're absolutely destroying it in the first 3 months. Last year we destroyed it over the whole year. The proof is in the pudding, and pudding's pretty solid. Jacob, will you do indicator for the other platforms like TradeStation? So the answer is, as of right now, no. But the only reason is, so the reason it's not on, say, Thinkorswim is they don't protect the code. TradingView protects the code. So um, I haven't looked into TradeStation, I'll be honest with you, but I can look into that. As long as they protect the code and my coder can write it for that platform, then yeah, that we can do that. But right now it's only on TradingView. Will the basic $12.95 TradingView subscription work for this indicator to work? Yeah, so if you don't have a TradingView account, don't sign up for anything yet if you want to get one, because you can get I have a link once you sign up for the indicator on my website. And if you click that link, you get a discount. And I'm always upfront and honest. I also get a kickback off of that, but it also gives you a discount. So you can get a discount, but you also need the CBOT. Oh, here, I'll just pull it up. I know it's on here. You need the CBOT package, I think it is. Let's see here. I don't think it shows too much information. I think I did this last live stream too. So settings, account and billing. So I have this one here, CME Group E-mini included. It's $7 right here. So it's the CME Group E-mini included. You're welcome, Paul. I hope you had a good day today. I know I did. I'm having a good day. It's only 8 o'clock where I live. What a great morning. Good morning to everybody. Hope you're having a good day. Hope you're having fun today. This is the type of stuff we do in my room. We have winning trades. We laugh. We do funny things. I'm pretty personable. I share my family stuff a lot. I think the group is a lot more like a family than it is a trading group. There's very little negativity in it. And if there is, that gets handled, because I don't care that you have a different opinion than me or any of my traders or any of the people in my room. Just share it respectfully. That's all. But the trading room, the other room, there's a lot of very smart people in there with very good ideas. I would say if you're struggling with trading, though, listen to PT and myself. Don't listen to people who are paying to be in a trading room for trading advice. That's not to say, like I said, that there aren't some good ones in there. Okay, they're going to push through this high volume level. If they don't fail here, then we should see some squeezing. But it's very family-like in there. You know, I've people that I would consider friends I've met outside of the trading group. It's really awesome. It's a lot of fun. And I like I said, I really enjoy helping people, and trading is boring anyway, so I love having a group of friends and family around, and it's really nice. Great trading day. Only took some of the profits on the first, but enjoyed my profits on the second. Awesome. Glad to hear it. So this is a pretty big time for the Bulls. They can reject a little bit here. Obviously, they're kind of far from the 21. So they can reject even all the way back down to here and continue. I would not be surprised or shocked to see that. But if they do, again, continue to just kind of push here, this will squeeze, and it'll squeeze pretty hard to 562. So if they do push, you'll know, because we'll be at 562 in a hurry. And then from there, that's the next major level. And from there, we'll see if they can continue to push, or if we are in a potential rejection area there. All right, let's move our stops up to 420. Remember, guys, we bought into this for $1.86. We are well above 100% now on this last portion of the trade. I do need to do a little bit of marketing. Guys, if you think about it, go over to Instagram and like anything on my account, share it. I need to grow my Instagram. It sucks. I do not have a great Instagram account. And if you guys want to join, I give content over there. That'd be great. Or if you just want to go over, if you're already joined, like or share anything, that would be amazing. I do appreciate any help for that, growing that account. All right, they are back above this spike, so it looks like we can try to squeeze here. Too big for my camera. I gotta move it over. All right. We respect each other in the trading room, Paul, aka Pirate. I appreciate that, Paul. If everyone, all the big institution, buys your indicator, so you think it will stop working? uh, if all the big institutions want to buy it, I guess they can. I don't think that's the case, though, because they can't stop doing what's in the background. They don't know what's in the background of it. The big institutions buy and sell the way they buy and sell, which is one of the reasons it works. So, um, yeah, they don't have the code. If they want to buy it from me for quite a bit of money, then I'll sell them the code. I've said it once and I'll say it again. Jacob's community is like a family. Everyone helps out. There are those who know more and those who know less, and it's even fun to be there. Jacob is with us during market hours, but the rest of the time, even at 3 a.m. on Sundays, there's always someone in the community willing to help. That's awesome, Juan. Thank you so much. I guess we got to move our stops up again. Darn it. Stops to 450 here. I haven't really looked because I don't really pay much attention to the news. Is there a Does Trump have a press conference or something tomorrow? I know it's tariff day. I got that. But my point is there a scheduled time that he's going to say that the tariffs are good or bad or something? Is that like a press conference? Or is that just tomorrow's the day that something's supposed to be said? If big institutions buy your indicator, you could buy a yacht. Yeah, probably, because um, I wouldn't sell it for cheap. I know that. TradingView says 1 p.m. for that. Okay. I guess there's a 1 p.m. announcement then. So yesterday in our live video in the room, I talked about this exact setup, that we had positive divergence. We had a very good reversal candle yesterday on decent volume. It was very likely that you would see some bull follow through today. We're seeing that now. So we are up 17 points, 18 points on the ES. So we're getting the follow through now. The bulls, excuse me, the bulls really need to break through some key levels to open the door to the bigger bounce in either a wave B that will turn down nasty or back to the highs. Oh, 1 p.m. Mountain Standard Time. That's a weird one. So what's that for me? 12 o'clock? So an hour before the close. Okay. My stop. I'm gonna move my stop up to 460 here. Guys, we are at about 300% of our initial price right now, 520. $1.86 times 3 is what, 54. So 540 would be 300%. So we're about 20 cents off of being 300% up from where we bought on a single trade. And on this one over here, we were 100% on our trade down. So you want to catch these monster moves. The indicator is the place to be. It's not perfect, like I said, but it's sure darn good. Again, 30% off the monthly. If you get the yearly, you get 50% off of Trade Waves, which does include both Elliott Wave courses for free. All right, let's move our stops up to $5. The squeeze is on. Could you quickly check NQ? Yeah. NQ, good follow through here. Let's go down to a little smaller chart. What do you want to know exactly, Juan? So right now this is looking like a A-B setup. We're not looking for a impulsive wave. So if we're looking for this to be A and B, why didn't that work? Dang it. Try that again. This is, I think I'd look at it this way. If this is A and B, we're looking at, that makes sense. The top of this breakdown area right here, so 19,800 is about the target. which would be, again, very, very strong resistance here. You can see this is the breakdown area right here that they broke through. And if you come across, this is the area they broke down from. So 19.8 would be the overall target here if that's what you're looking for. But a very bullish setup here overall. If anybody wants to share this live, they can. Tell your friends and family. I want everybody to succeed, guys. Obviously, I run a business. I want to make money. But I make money trading and I make money helping people. But I want you guys to succeed and I want people to succeed. I want people to beat the market. I think that I want Robinhood to go out of business. If you've seen Dumb Money, I think what Robinhood did to people is one of the most scandalous things of all time. That billionaires can just be bailed out like that is outrageous when they already have money and they make terrible decisions and screw people over. So I want the little guy to win. I want you guys to succeed. That is my whole goal in doing this, is that it's really hard for the little guy to succeed in the market because of emotion, because of lack of education, because of lack of tools. So I want you guys to have those things. That's why I do this. So share this. Tell people about it. I mean, if you're having a good time, let your family have a good time. Don't leave them in the cold if they're traders and they want to be a part of it. Okay, let's move our stops to 550. Now we're coming into this 562 area, guys. I told you this was where we would squeeze to and it'd get there in a hurry. Took them, 15 minutes to get that another 2 points here. They're just short of 562, which is a big level. Again, that's the call resistance. If we zoom out, your zero gamma wall here, call resistance. You have your next one at 564. Those are going to be big levels for the bulls to get through. If they do, we will continue squeezing just like this. It will be a nasty move up. It already is a nasty move up. This is really a rocket ride. If you're a trader and you're watching this and you don't have the indicator, I just don't know what you want to see because, my goodness, smoke show. Now I can say today is a bit of an anomaly, getting a 50-point move down and a, 60, 70-point move up in the same day. That's different. Getting one of these in a day is not that uncommon, but getting two like this is really awesome day. So they're rejecting price here at 562. We'll see if they can hold and push back through. They're going to want to hold this level here now, this 560 level. It's not the end of the world if they don't. Again, they're really far away from the 21 in VWAP, so very likely we come down and check it. We may even get a sell off of this, but again, once this stops out, I am going to shut down the live stream and in the codes, and it looks like it is going to stop out. Yeah, we stopped out right there. So we stopped for 550. I hope you guys were okay making 300% on the last part of that trade. Guys, I really appreciate you being here. As I said, the coupon code will be good for about another half hour. TradeWaves Academy, 50% off if you get the yearly. Monthly 30 is the coupon code to get 30% off of your first month. We'll do it again next week. I appreciate all of the support. Thank you guys for coming in, and have a wonderful rest of your week. And for the subscribers, I'll be back in the live room. Thanks, everybody.